name's Marting Pring, and together with the folks at MetaStock, we put together a special add-on package featuring my Special K indicator. So the purpose of this mercifully brief presentation is to tell you a bit about the indicator, why it's useful, and what's in the package. This Special K add-in package for MetaStock not only gives you the ability to plot and understand the indicator, apply experts and explorations, but it also comes with a complete library of layouts, templates, and data that will enable you to trade sectors, international markets, and commodities through a complete ETF library. While the emphasis of this package is very much oriented to ETFs, this indicator and the provided templates can be applied to any security anywhere on the globe, provided you have 4 years of data to plot it. The concept behind the Special K or SPK comes from the idea that price at any one time is influenced by a number of different time cycles. This diagram represents this point because it features the three main trends. First, the primary trend, lasting between 9 months and 2 years. The intermediate trend, which typically takes between 6 weeks and 9 months to unfold. And finally, the short-term trend, which lasts from 2 to 6 weeks. It's pretty obvious that investors need to have some understanding of the direction and maturity of the primary trend, since it's their objective to buy near the bottom and sell close to the top. It's never possible to get the exact turning point unless you're consistently blessed with good luck. But if you can buy within 10 to 15% of the final turning point, that's pretty good. This chart shows my long-term KST, a smooth momentum indicator, which attempts to reflect that green line in the diagram in chart format, that the unusual length of the 2003-2007 bull market resulted in a false sense of weakness in 2005. But for the rest of the time, these pink rectangles, which flag reversals in the KST, offered pretty good signals of when the price was experiencing ranging action prior to declining. Here's the same thing for market bottoms. If you're a short-term trader, you're probably saying to yourself that this long-term stuff doesn't matter. If your time horizon is so brief that you're a day trader or a high-frequency trader, which is now the politically correct term, you're probably right. The primary trend is not important. But for short-term traders, it is. That's because the primary trend determines the characteristics of the short-term trend. Let's get rid of the intermediate series to simplify matters. Now you can see that if you want to go long, you need to do this in the left-hand part of the chart, where the magnitude of the short-term moves is far greater than on the bearish right-hand part. I've done a lot of testing of short-term momentum indicators over the years and observed many upside breakouts and price patterns. My conclusion is that if a short-term buy signal or breakout is going to fail from the long side, it will happen during a bear market, and vice versa for short sales in a bull market. That's all very well and good, you may be saying. So how does the Special K help me in my trading and investing? The Special K has two great benefits. First, it signals primary trend reversals at an early stage. And second, it tells you when short-term opportunities are developing in that direction. They say a rising tide lifts all boats. The Special K tells you when the tide is rising or falling, and when to get in or out of the boat. In other words, it helps you capitalize on those short-term bull market buying opportunities and to avoid those potentially deceptive buys on the right-hand part of the diagram when the bear market is in force. So what is this Special K? Well, it's calculated by literally adding up the green primary trend, the blue intermediate series, and arriving at the brown dashed short-term series. So let's get rid of the long and intermediate series and modify the short-term trend and rename it as the Special K. In an ideal world, that would mean that the ultimate peak and trough in the Special K should correspond to the bull and bear market turning points. Does it? Well, remember, in technical analysis, there are no certainties, so we try to achieve consistency and never perfection. Bearing that in mind, This chart shows the CRB composite together with the special K, and you can see that most of the turning points work quite well. Here are the peaks, and here are the troughs. Nothing is perfect, so these dashed arrows represent the exceptions. Obviously, these turning points are fairly evident with the benefit of hindsight, but how do we identify them in real time? Well, without giving too much away, there's a 40 to 45 minute movie in the add-in package that explains what to look for. Also included in the add-on package are some templates, such as this arrangement, which allows you to compare the special K with a short-term momentum indicator known as the KST. Including the KST in the arrangement makes it possible to assess whether the near-term technical picture is overstretched or not. See how every twist and turn in the special K is reflected by the KST, but whereas the special K does not easily tell you when it's about to reverse, the oversold and overbought readings in the KST do. Arguably, most useful of all is an expert system, which does two things. First, it objectively determines whether the current primary trend is bullish or bearish. Second, it identifies if the short-term trend is also bullish. If both conditions hold, the plot goes to green. If they disagree, then we get a black highlight, and when both are bearish, it's plotted in red. In other words, going back to this diagram, the expert flags all of the short-term buy signals that develop in the direction of the primary trend. There's also a full commentary with the experts included in the package. If you like this arrangement, including the expert, you can always save it as a template. Arguably, best of all, the package also includes some expirations, so on an end-of-day basis, you can search your entire database for these bullish and bearish conditions as they're happening. When your system spots these opportunities, I'd certainly recommend you check your favorite indicators to make sure there's an agreement before actually taking action. That's going to increase your odds of success, and since we're not dealing in certainties, increasing those probabilities also makes great sense. If you're into sector rotation using ETFs, this package is made for you, since we have included all the necessary data and a host of layouts that plot a multitude of relative relationships. Here, for example, is a template that compares the relative performance of the IYJ, the iShare Dow Jones Industrial Sector, to the S&P. A rising line means that the industrials are outperforming the S&P and vice versa. See how the waves in the special K align quite nicely with the RS line itself. Since the SBK is quite jagged, it's also possible to construct trend lines for it, so we get great long-term buy and sell signals. The package not only includes layouts containing relative strength arrangements such as this for the various sectors, but a layout for each sector just plotted on a relative basis against every other sector, so you can really get a great feel for which sectors to buy or avoid. To sum up, 1. The special K helps determine the maturity and direction of the primary trend. 2. It offers timely signals at primary trend reversals. 3. It offers short-term buy and sell signals in conjunction with the prevailing primary trend. And 4. It can be used for analyzing relative strength relationships. So what's included in the package? 1. A complete course on the theory and application of this unique indicator, both in video and text format. 2. The ETF data to plot it. In many instances, specific ETFs have only been trading for a limited period, but the package includes historical data from some of the tracking indexes and commodities that have been spliced to the original ETFs. The result is a seamless history going back to the 1980s for SPDR sectors and often earlier for most commodities. 3. Templates that can apply the indicator to any security with 4 years of historical data. 4. Layouts which provide a convenient and super quick method for plotting sectors, international ETFs and commodities on both an absolute and relative basis. 5. Explorations that allow traders to scan for pro-trend short-term buy and sell signals on any security with 4 years of historical data. 6. Experts that identify short-term buy and sell signals, complete with commentary. So here's a picture of the add-in, which comes in DVD format, complete with installation instructions and a comprehensive manual in PDF format. The list price is $299. And if you'd like more information on the package, please click on the link below, which will take you directly to the manual, which you can then download. We certainly hope you consider this add-in to augment your MetaStock charting. But in the meantime, good luck and good charting.